Obviously, you've got the headlines overnight seem to be a bit more positive on Russia, Ukraine, and that's certainly been reflected in market pricing, which is, some of that risk premium has come off a little bit over the past couple of days. So I do think, with that, maybe, I wouldn't say in the back mirror, but the temperature maybe coming down a little bit. Focus will turn to the FOMC minutes coming out this afternoon.
What do you expect to hear from those FOMC minutes as the market is trying to debate exactly how many rate hikes we will have, maybe somewhere between 4 and 7, and whether the Fed will actually come out of the gate with a 50 basis point rate hike? What do you expect the minutes will give us? Any detail, any glimmer into what we might be hearing?
Well, that's a tricky one. The minutes in a way are already out of date, right? That was 3 weeks ago. We've had quite a few, quite a lot of information since then, particularly from FOMC members. You had Bullard last week with quite a radical proposal, 100 basis points in the next few months. I don't think the minutes will be that specific, but anything about whether they talked about a 50 basis point hike, for or against, most members still seem to be against that. So I'd be surprised if there was a clear signal on that front. But also on QT and when that's going to start and how aggressive that's going to be. I think that's where the Fed is still, they still seem to be working that one out. And there's a lot less clarity on that point.
Inflation just seems to keep running hotter and hotter, whether you're looking at the CPI numbers or the PPI numbers that just came out today. We're going to get retail sales. How should investors be thinking about some of these economic data points and inflation and how that plays into things like retail sales or growing revenues? Is that really going to be a sign of health, or is it just about inflation? Is unit growth actually increasing?
You mean real, in the sense of real growth. It's obviously a lot less positive than the headline nominal figures you're getting now with inflation this high. That said, inflation, we've been saying this for a while now, it will eventually start to come off. 7% is probably not going to last. But the real question is, where does it settle in the second half of this year? Are we getting back to 2 and a bit, which I think the Fed is hoping for? I think we're all hoping for. Or is it settling somewhere more like 3 or 4% that would, force the Fed to go potentially even more aggressive than what's already discounted?